Why do some finance gurus and certified financial planners talk bad about infinite banking? Had to address this. Brought to you by SCFSIC. This video is going to address why some advisors, financial planners, warn against or advise against the infinite banking concept and strategy. Ordinarily, I wouldn't even dignify the objections that I've seen with a response, but with the objective of wanting to help people, and recently seeing one more supposed financial expert making a point to promote his negative view, I feel a responsibility to address his arguments, and those of the others, which are pretty much all the same. His arguments are the same as what I've seen espoused by other self-appointed financial gurus, and I'm here to tell you, they have it all wrong. Here's a direct quote from the last of these that I most recently saw, and he says, and I quote, "Insurance agents are compensated by commissions on the products that they sell. They have no fiduciary responsibility to act in the best interests of their customers. Second, whole life insurance pays some of the highest commissions of any financial product on the planet. The typical commission ranges from 50% to 70% of the first year's premium." End of quote. Yes, it's true that insurance agents are paid by commission. The commissions are paid by the insurance companies, not by the clients. These now fee-based advisors, prior to the new fiduciary rule implemented by the DOL last year, which is 2019, used to collect both fees and commissions. Now, they're restricted to only fees. And this is why the new fiduciary rule was put in place, because there were so many complaints about financial advisors not acting in the best interests of their clients. Not insurance agents. You can look this up. That's the whole reason for the new rule. In fact, that rule, that's the rule that restricts financial advisors and planners to being fee-based and no longer able to collect commissions. And yes, insurance agents absolutely do have fiduciary obligation to clients. But most of these insurance agents were excluded from the new fiduciary rule because it wasn't insurance agents who were the offenders. It was the financial planners. Now, the statement that whole life insurance commissions may be as high as 50 to 70% of the first year's premiums is also true. That isn't what the gurus say. These financial planners and gurus say that the commissions for whole life are among the highest paid of any financial product. Well, I don't know about that because I don't sell investment products. And for your information, while financial planners and advisors are now fee-based, when they place investments or make trades in behalf of their clients, they do collect a percentage of the trade in the way of fees, and that comes out of their clients' money. Here's something else I know. Term insurance, which is what most planners and advisors like to sell their clients, pays 100% of the first year's premiums. Not 50 to 70%, 100%. And universal insurance, which are term hybrids, pay as much as 130% of the first year's premiums as commissions. Now back to infinite banking. Yes, infinite banking utilizes the cash value of whole life insurance. But an account properly designed for infinite banking and the tax-free cash growth warehouse strategy incorporates the smallest whole life base policy possible, and then riders that increase the benefit value and the cash value growth to the maximum are added to that base whole life policy. Those riders, which make up by far the majority of the total of the policy, only pay about 2% commission. So the commission on a properly designed infinite banking account typically comes out to between 12 and 20% total of the first year's premium. And then the residual commissions may be as much as 10%, and they go down each year, dropping eventually to zero residual commission after about 5 to 10 years. On the other hand, investment products and advisors' fees continue every year, and they do come out of the client's money. And they go on, and they don't stop. They don't end. And it doesn't matter if the client makes any gains or suffers losses. The advisor still collects his fees. These financial gurus keep touting investment products such as 401ks and IRAs and securities as a superior way to grow your money. But unlike whole life insurance, which guarantees growth at a minimum 4% annual compounding interest and zero losses, all those supposed superior investments are subject to losses and have no guarantees other than risk and fees. Those are guaranteed. Just ask anyone who had a 401k in 2019 and lost 40% or more of their savings in the first 4 months of 2020. Okay, I got that off my chest and I feel better now. And you may have questions, so feel free to post your questions and comments in the comment section below here, and I will address them. Many questions about the infinite banking and the TFCGW strategy are answered in the other videos on this channel. Please look around. And if you like what you see, please subscribe and share this channel. There's more to come, and you will be notified as we post more content. For the truth, the whole truth, and nothing but the truth about infinite banking and the tax-free cash growth warehouse strategies, watch our free 60-minute webinar called How to Become Master of Your Financial World by clicking on the link in the description box below here. And remember, we're here to help.